Peter Miller, Chris Driessen, Slang Worldwide on the Dales Report.
All right, I am joined with Peter Miller, newly appointed Executive Chairman of Slang Worldwide, and Mr. Chris Driessen, who's now the President and CEO. Gentlemen, thanks for joining me here today.
Thanks for having us on.
Last week, there was obviously the announcement with obviously you being appointed as Chairman, Peter, and obviously Chris as President and CEO. So why were these changes made, and what does this mean in the short term for your shareholders?
Yeah, I'll take that. It's, we're adapting to ever-changing market conditions. Peter, Billy, Kelly did a fantastic job founding the company, taking us public, raising, a ton of money, getting us into several accretive M&A transactions. Okay. And so it's really just the natural evolution that now it's our time to obviously integrate those things, reduce our cost, focus on profitability. So it's simply a transition to the folks that have been in the operational trenches thus far, kind of carrying us into our next phase of growth. And so, for example, I've overseen our U.S. operating entities now for years and years and years. So it just kind of made best sense that I would move into that role. My colleague, John Moynan, has overseen our strategic partnerships, the negotiation and implementation of those partnerships, whether that's with folks like TrueLeave or Canopy Up with AgriFarm and a whole host of others. So it just made sense that, that these people are now in these roles, but still get the benefit of having Peter and Billy and Kelly, extremely close by and participating with us on a day-to-day basis. So, just kind of allowed everybody to be in the seat that allowed them to provide the most value to the company.
Peter, walk me through how did the whole relationship get established?
Yeah, that's actually a good segue to what I was going to add to Chris's point, which is we've kind of known each other as friends, collaborators, colleagues 4 years ago this summer. And Chris and John and especially those two were two of the guys that made us really excited about investing in Organa in the old days, ultimately consolidating our entire businesses a year and a half ago. And he's been a common thread operationally in management from those assets going back to 2014, I believe, Chris. Correct me if I'm wrong.
You're right.
And so he has the best handle on all the folks on both sides of the equation of the business, and he's just a hell of an executor. We've been working on what a transition like this could look like to both reflect the times that we're in, but also just as a long-term streamlining of what we're trying to accomplish. And COVID kind of forced us to trial run this before we otherwise may have, meaning, the last flight I was on was actually back from Denver at the beginning of March. And 2 days before that, I saw you in person, and you were one of the last people I saw outside of my bubble, professionally and personally. And so since then, Chris and the team have been boots on the ground every single day, making sure everything continues to run properly, and we manage this trying but ultimately rewarding situation as a business.
Yeah, it's beginning of March, doesn't it seem like years ago? It's just so much has changed.
It is the last haircut I had too. I think week before that flight.
Wondering if you're hanging out with Tom Hanks in the movie Castaway.
Yeah.
Wilson.
My painted volleyball Wilson is over that way.
All good. I'm sure you're not the only one going through those times right now. So getting back, it's like, is this a signal to the markets? That you're changing your strategy at all, and changing your focus? And if so, like what can investors expect over the next few months, knowing that, we're in uncharted territories. It's tough to predict. Obviously this industry continues to grow, but we're unpredictable, obviously, markets right now.
Yeah, I wouldn't say it's been a change in strategy at all, and this, while COVID has been challenging for the world and obviously Slang included, this is something we were on the path of really since late Q3, early Q4 of last year.
Okay.
We started to see the sentiment shift in capital markets. It was clear that profit was being prioritized over revenue. And so we wanted to be very mindful of that and frankly, be ahead of the curve. So we've been working on, cost reduction, integrating, the acquisitions that that we have on deck, preparing ourselves for growth for months and months. And, COVID came kind of on the tail end of that for us. So again, a natural transition there. But I would say that there's been a slight polishing of our strategy.
Okay.
At a high level, we really make money three ways. In a core market, which we view that as Oregon and Colorado, we do everything up to including wholesale to the dispensaries themselves, either ourselves or our associate businesses. In an emerging market, a place like Florida or Michigan or Ohio, we develop a strategic partnership there that includes a licensing component, which we've always done. Kind of the new shine that we've put on that is we found out that people really work with us and value working with us, not only for our great brands and how well they perform, but all the business services that we provide them as well, just improving their core business through our processes, obviously making our branded products and just making them a more viable, stronger business in general. So we figured out a way to capture some of that revenue.
What do you hear from your day-to-day customers? Like when you talk about how they like our brands, what do they share with you? What do they like?
Yeah, the scoreboard, just the performance. You've got available analytics or state data in a lot of these places, and the scoreboard doesn't lie. We lead the market in several places and in several categories. So for us, it's a key distinction. A consumer is the person ultimately consuming our products. And those people choose our brands and pay a premium for those brands because it's reliable, it's safe, it's consistent. They know what to expect. They had a good experience and they know we're going to deliver them that again and again. And that's a testament to our processes.
Question for both of you, and I'll begin with Peter, is that, we're in a pandemic time where you look at it, and I'm finding in this cannabis industry and a lot of people I'm speaking to is people are very dependent on trusted brands right now. The biggest competition, I think, is not necessarily the people that you're competing against from a publicly traded market here in this industry. It's more about the illicit market. And in a time where people want health and wellness front and center, knowing the fact that we're in a bit of a pandemic, brand loyalty seems to be front and center. So saying that, what kind of opportunity does that present, knowing that you're such an established brand in this space right now, and how you view that sort of thing?
Yeah, I was talking with our colleague Billy Levy about this yesterday, and it's a kind of a common theme right now with everybody shut in and unable to do some of that pavement pounding and relationship building. You're seeing folks kind of harvesting existing relationships, or you're leaning deeper into relationships you already have where trust has already been established. And that's both strategically on the investor and M&A side, because you really just can't go form those in-person relationships, press the flash, break bread, and do all the things that are so important to establishing trust. So this situation has benefited a few companies. It's hurt everybody to an extent. And this is obviously, we have to detach the human element a little bit for the purpose of this conversation, because this has been a tragic dynamic for the entire world, and we don't take that at all lightly. But what we've seen in cannabis is that, whether it's these management changes we're discussing, streamlining what we're doing, whether it's customers, to your point, having a little more trust and confidence in dealing with us because there's relationships that go back years, or whether it's strategic conversations with potential partners who have already had the opportunity to come see our facilities. We've seen theirs. This typical multi-month relationship building exercise before a deal gets done has been done in a lot of cases already for us.
How does a company like yours navigate the waters when a fast-moving industry meets an uncertain economy? So where are we over the next 6 to 12 months, and how are you preparing for that?
Yeah, I think it's one of the most amazing things about our business model is our agility. Okay. People talk about turning around aircraft carriers and this and that, and that's certainly not our case. We've got a tight leadership team that's very closely aligned, both personally and professionally. And the beauty of our business model is we can deploy resources into core markets when necessary, but just as agilely, we can pull those resources out when things change in Massachusetts or California, when you align with a strategic partner like we did with Gage Cannabis in Michigan or Trulieve in Florida. So we're able to pivot in and out of that very quickly. And not only do we have a strong balance sheet, we've got a very clean balance sheet. We're very fortunate that we've never had to take on, really any material level of debt. like unfortunately a lot of our predecessors have. And then obviously this exacerbates that situation when they've got to make that note. So we're in a very enviable position that not only do we have a business model that can pivot quickly, but we've got the resources to execute on our plan already in hand.